You said on your show many times that gold is considered a hedge against inflation and the political uncertainty as well. So explain in layman terms, what do you mean with that?
Well, inflation causes prices to go up. And so you might have noticed that everything costs more these days. The supermarket, the food is more expensive. Your electric bill is higher. Your insurance costs are going up. And so gold does the same thing. When inflation pushes up prices, it pushes up gold prices. Gold is a commodity. If you hold on to dollars or euros, you're going to lose your purchasing power because the price will go up in those currencies, but the price might stay stable or more likely go down. I think that the price of most commodities over the course of the next several years will drop in terms of gold.
Is Bitcoin the new gold? Well, there is one person who definitely doesn't think so, and that's Peter Schiff. Peter Schiff is an American stockbroker, economist, and media personality. He's well known for his love for precious metals, especially gold, and his skepticism about Bitcoin. He has called Bitcoin a bubble many times, and he still believes it has no future. Well, that's what he thinks. However, he has said he wishes he had bought Bitcoin in 2010. So, without further ado, I'm going to share my conversation with Peter. But before we get into the show, I'm going to ask you one thing. If you are watching our interviews and you are not yet part of our community, click the subscribe button on YouTube or follow us on social media, on Spotify, on Apple Podcasts, not just to stay up to date with our news and interviews, but also to give us your feedback, your comment. That is so important for us to grow the channel and keep delivering valuable content to all our viewers and audience and amazing community. Finally, one thing to remember, on the show, there is no financial advice. All the content is for informational purposes. Sometimes I share my opinion and my views, and the same the guest can do. But you should never act at the back of any opinion. You need to do your own research, go out and find out the information that you need to make informed decision. And remember, investing is very risky, and when it comes down to crypto, is even more risky. So you need to be very careful. Now, let's get straight into my conversation with Peter. Welcome, Peter.
Wow, thanks, Steffi, for inviting me on your podcast.
Well, I'm really looking forward to this discussion. So you are a strong proponent of investing in gold, right? So tell me why gold and how this love has started for you.
It's not that I believe that people should invest in gold, because I don't look at gold as an investment per se. I look at it as saving. So I think people should save in gold as opposed to dollars or euros or yen or pounds, because I think all those currencies are destined to lose value. The governments are going to keep creating them. And that's, they're telling you they're targeting 2% inflation, but they're going to overshoot dramatically. But they're deliberately debasing their currency. And so there's no reason to hold on to it. I mean, you can spend it, buy stuff with it, but if you're not going to spend it, don't save it, convert it into real money, and that would be gold. And I think that people should have savings, and unfortunately, you need to save in gold. Now, you forego interest, but the interest that you earn on fiat currency is not enough to offset what you lose to inflation. So you're better off holding gold, holding silver. Now, I do look at mining stocks as investments, owning a business, a gold mining company. I think those are particularly good investments right now. I think they're underpriced, and I don't think they accurately reflect where gold is likely to be in the future. And so I think the profits of these companies will be much higher in the future, and the dividends that they throw off will be much higher. So I think that gold mining stocks are good investment. They're a speculative investment as far as investments go. There's a lot that could go wrong, and so there's risk. But I think the reward will be worth the risk, and I think the upside potential is much greater than the downside risk. So I think they're a good investment right now.
Let's take a step back, right? You said on your show many times that gold is considered a hedge against inflation and the political uncertainty as well. So maybe explain in layman terms, what do you mean with that?
Well, inflation causes prices to go up. And so you might have noticed that everything costs more these days. The supermarket, the food is more expensive. Your electric bill is higher. Your insurance costs are going up. And so gold does the same thing. When inflation pushes up prices, it pushes up gold prices. Gold is a commodity. It's like wheat or, copper or soybeans or pork bellies. And its price goes up with other commodity prices. Now, it's hard to store a bunch of pork bellies or oil, but it's easy to store gold. So instead of buying all those commodities, you just hold on to gold, and then you could trade your gold in the future for those other commodities. And assuming the price of gold goes up equal to the price of those other commodities, you've maintained your purchasing power. But if you hold on to dollars or euros, you're going to lose your purchasing power because the price will go up in those currencies, but the price might stay stable or more likely go down. I think that the price of most commodities over the course of the next several years will drop in terms of gold. So you'll be able to buy more wheat, more oil, more pork bellies for an ounce of gold in a few years than you can today. On the other hand, you'll be able to buy a lot less of those commodities if you just hold on to dollars.
So what is your price prediction for gold by the end of the year, let's say?
Well, no one is really smart enough to know where it's going to be at the end of any given year. Certainly not this year, but I think the price is going higher. So as we're recording this interview, we're just below 2,400 an ounce. So we've moved up 20% from 2000, which was kind of the resistance. So I think we'll end the year closer to 3,000 than 2,000. Maybe we'll even end higher than 3,000. It's hard to say, but I think we're going much higher. We could end next year above 5,000, but I don't think that's the top either. I think gold still has a ways to go.
So, in the current climate, gold has been performing quite well, especially over the last few months. Why the media is not talking about it?
Well, they really have never really talked about gold too much. They've been very dismissive of it. I remember even when it had the big move in the 2000s, where it went in 2001, you could have bought gold for under $400. And by 2011, it was almost 2,000. And there was very little coverage of the rally. There's probably even less coverage now. I think especially since they're distracted by Bitcoin. So they would rather talk about fool's gold than real gold. And also, I think, if you start acknowledging gold, it really undercuts the narrative that they're selling on Wall Street, which is that everything is fine, we're going to have a soft landing, that inflation is going back down to 2%, that the Fed could cut rates, that everything is awesome, and you just buy the S&P and buy the Magnificent Seven. If you acknowledge the warning that gold is sending, it throws cold water on that. And so I think they have a vested interest in not noticing gold. And every once in a while, when they mention it, they don't even talk about why it's really going up, which is inflation, a coming debt crisis, a Fed that is doing the wrong thing. The Fed should be hiking rates. Instead, it's planning on cutting rates. And fiscal policy, we should be cutting government spending. Instead, government spending continues to rise. So whenever they try to talk about gold, they say, well, it's political uncertainty. That's why it's going up. Right? Because that's not why it's going up. It's the economics. It's inflation. It's a debt crisis. It's a loss of confidence in the Fed, in the Treasury. That's why gold is going up. It's de-dollarization. It's the dollar being knocked off its pedestal and about to lose its status as the reserve currency. There are some serious implications to what's going on. Gold is sounding the alarm. It's just falling on deaf ears.
I remember the last time there was a lot of talks in the media. I think it was 2020 when also gold went up a lot. It was during COVID. That's where the media was kind of making a bit of noise about gold.
Yeah, well, again, that's all you do is make noise. But a lot of times they don't even talk about it. Many times gold makes a $30, $40 move hits a new record high and it doesn't even get a mention. They'll talk about everything but gold.
Yeah. I mean, maybe they are looking for kind of like big jumps. But let's go back to mining stocks. Obviously, lots of people watching my show, they are traders, they're investors in equities and also in crypto. So which mining stock are you following? And most importantly, how do you assess which ones to go into?
Well, I hired a guy to run my gold fund and my separately managed accounts at Europe Pacific Asset Management. That's Adrian Day. So he's forgotten more about gold mining than most analysts know. He's been doing this for 30, 40 years, so he's got a great track record. That's why I hired him. So if you want to get into space, I think that's the best way to do it. People can buy my fund, no load, any of the major discount brokers, the Europe Pacific Gold Fund. EPIGX, I think, is the no-load advisors class. People can also open up an account with us, and we can manage an individual portfolio of gold mining stocks. If you want to just do it yourself, you could check out some of the stocks that we hold in our fund. Obviously, the big stocks that everybody knows, they're going to do fine, the major mining companies. It's the smaller ones that are more problematic. They offer a lot more potential, but also the potential for loss is if you pick the wrong ones. That's why it's good to hire a guy like Adrian Day to do it for you. But if you said you have viewers who are in crypto, just make sure that there you're not really investing or even speculating. I think you're gambling. I mean, you can make money. They're professional gamblers who make money, but you got to be very careful because you're playing with a hot potato because there's no real value there. So at any moment, the bottom could drop out. People could come to their senses, and this whole thing ends. So it's like a game of musical chairs. I mean, everybody is happy and dancing along, but when the music stops, you got to be in a chair, and that means you've sold, right? You're out of crypto or Bitcoin, because if the music stops and you're still holding, you're the bag holder.
People like to speculate, they like to take a risk, and that's where maybe the stock market was performing that before crypto arrived. But going back to inflation, which obviously is the big problem, and you refer many times as the elephant in the room. But beyond gold, what are other inflation hedge assets that investors should consider?
Well, you want to own real assets. I mean, inflation wipes out paper assets. So the worst place to be in inflation is in cash, in bonds, in annuities, in the cash value of an insurance policy. So you want to own real assets, which would include stocks, real estate, commodities. But, certain types of stocks are going to do a lot better in an inflationary environment than others. So the stocks that don't do very well are stocks that don't have any earnings and that are growth oriented, where the earnings are supposed to manifest themselves at some distant point in the future. So those stocks don't have nearly as much value in a high inflation environment as they would in a low inflation environment. So the kind of stocks that you want to buy in a high inflation environment are the kind of stocks that most people aren't looking at. They're the traditional value dividend paying businesses, companies that are earning money right now. They're not maybe going to earn money in 10 or 20 years. They're earning it right now, and they're paying dividends. And they're selling products and services that the consumer actually needs. It's not discretionary. It's stuff they have to buy. And if the price goes up, they'll keep buying it. Maybe they'll buy a little less, but they'll keep buying it. And so that's what you need. You need businesses that have pricing power, can raise their prices without blowing up their profits, and then share those higher profits with their shareholders.
Give me your thoughts on oil.
Well, again, all commodities, oil prices are headed quite a bit higher. And there's also other factors at play with oil, the geopolitics of it. But oil's an important commodity, even though people think, well, we're moving beyond that. We're going all electric and stuff. And electric is a small part of energy, and that still requires a lot of copper, a lot of nickel and stuff like that. But I think oil prices are going substantially higher. I think in terms of gold, they'll go a bit lower, but in terms of dollars and euros and yen, people are going to be paying much higher prices. And oil is not only important in the production process because you need energy to manufacture stuff, and a lot of that energy is derived from oil and gas, but you then need the oil to transport it to the end consumer. America, we have these huge trade deficits, so everything we buy has to be shipped over, an ocean, and they use a lot of oil on those big container ships. And then once it gets here, we load it all up on trucks and ship it all over the country. They use a lot of diesel. So we're very energy dependent. And unfortunately, that energy is going to cost a lot more.
It's so funny because you see they're very strong advocate of renewable energy, but really without oil, we are not there. We can't actually get the renewable energy industry to function yet. So it is an interesting...
Yeah, I'm sure at some point in the distant future, we won't be using oil anymore, but I don't know how many centuries away that is, or 1 century, even 50 years. But, in the foreseeable future, that is our number one, source. Fossil fuels are the least expensive source of power for us. And so that's what we have to use.
Moving to crypto, I remember a discussion that you had with Raoul Paul when he was basically saying that gold is great for protecting wealth, but not for creating new wealth, which is what the new generation needs to do. And that's where crypto and Bitcoin as a new asset class, they come in. So that kind of discussion, I stick to me. Can you recap your response and maybe articulate what you think on that?
I don't think there's been any wealth created as a result of Bitcoin. I mean, we have 19 million or so Bitcoin in existence today. And, 15 years ago, there were no Bitcoin. I don't think the world is any better off because we have these Bitcoin. I don't see the Bitcoin adding anything to the productive, stock of the nation. We certainly wasted a lot of energy creating these Bitcoin. I mean, they call it mining, but we're really solving complex mathematical problems. But I think it's all been a waste. Now, that said, there have been people that have gotten very rich off of Bitcoin. So from their perspective, they're wealthier than they used to be, but they didn't create wealth in the standard definition of what wealth is. They've enriched themselves, but at the expense of other people. Because everybody who has gotten rich on Bitcoin has gotten rich because they've sold their Bitcoin. And therefore, somebody else bought it. And so they're going to lose a lot of money. Now, they don't know that yet because they're holding on to a Bitcoin or whatever fraction of a Bitcoin they may have. But the money that they used to buy it, went to whoever sold it, who might have bought it for a fraction of the price. And now they've used that money to buy actual things. They bought real estate, they bought a car, they took a vacation, whatever they did with it, and they got to spend the money. But the person who bought their Bitcoin is just holding on to Bitcoin. Now, a lot of people that have all these Bitcoin, okay, on paper, they think they still have their money because they could look, and see what they're worth in the market, because there are still fools that are, buying them, greedy enough and ignorant enough to want to buy them. But when the music stops, as I said, and the bubble pops, the market's going to crash. And people who are left holding Bitcoin are holding the bag. And the people who got out made money, but at the expense of the people who got in and lost the money. But there's no real wealth created. It's just changing hands. The money goes from the Bitcoin buyer to the Bitcoin seller. Now, the ones that made the most are the ones that got in the earliest and sold the most and cashed out. And there's been a lot of people cashing out recently to the ETF buyers who are really the bag holders here. They've come very late to the party, and they're buying shares of these ETFs that own Bitcoin. That was a huge windfall for whoever sold those Bitcoin into these ETFs. But now you have a bunch of speculators who bought into these ETFs expecting Bitcoin to go, to 100,000 or more. And they're going to be very disappointed when it goes in the other direction very quickly. So
Peter, what do you think could trigger actually a significant correction in Bitcoin?
Well, Bitcoin's had, more lives than a cat, right? I mean, it's died and been reborn, it crashes 70, 80, 90% and comes back from the dead. So it seems like it's going to take a lot to kill this thing. But it's not immortal. It's a big bubble. I'll give it that. And the early adopters did a great job of selling this nonsense to the general population, or what percentage of them have fallen for it, including the financial media and some of these Wall Street firms that even got suckered into it. But I don't know. I mean, I've always thought that gold really going up could do it. And maybe we're seeing that now, because I think for the 10 years or so that Bitcoin was on the scene, and really the last 5, what drove the narrative was the lack of performance in gold, because gold was going sideways, consolidating a huge gain. Before Bitcoin came around, gold went from, again, under 400 to almost 2,000. Then Bitcoin shows up and gold spends about a decade just bouncing around, going sideways. And that frustrated a lot of gold people. And then they saw this new shiny, fool's gold, Bitcoin, making everybody rich. And I think a lot of people got tempted by that easy money. And it was with that backdrop that Bitcoin was able to get a lot of people in, because they kept saying, look how much better it's doing than gold. It's better than gold. It's gold 2.0. Well, now that gold is actually going up, and I think at the beginning of a much bigger move, the Bitcoin is not going to have that anymore. And I think a lot of the people who got out of gold and into Bitcoin are going to look to get back into gold and out of Bitcoin. And that's going to be easier said than done, because a lot of people can't get out of Bitcoin because there's not enough new money coming in to buy it. So there's just not the liquidity there. And, central banks are buying gold. They're going to continue to buy gold. They've never bought Bitcoin. I mean, other than El Salvador, you don't have any, and I don't think El Salvador even has a central bank. But the main central banks and the emerging market central banks, they're not touching Bitcoin. They're buying gold. And I think eventually when you get the pension funds and the endowments and the big money, they're not coming into Bitcoin. They're coming into gold. I mean, if they want an inflation hedge, if they want a store of value, if they want some portfolio insurance, they're not going for an asset even riskier than the assets they're trying to insure. They're going to go for something safe, and that's going to be gold.
How real is this scenario of gold standard coming back?
Well, I mean, I think the gold standard will come back, not because the politicians want it, but because the people demand it. I mean, I think it'll be the only way to put the inflation genie back in the bottle and to restore confidence in the monetary system. So I think we're going to ultimately be back on a gold standard. I mean, it's not going to be an easy path. Things are going to get a lot worse before that happens, because the politicians resist it. They don't like gold. They never did. That's why they took us off the gold standard, because gold keeps them honest. And that's the last thing politicians want to be, is honest. They want to give out something for nothing to buy votes. They want to spend money and run deficits. And you can't do that under a gold standard. You have to be fiscally prudent. You have to balance the books. And the politicians want no part of that. But eventually, when they destroy the currency and they unleash hyperinflation, the only way to restore order and confidence is to return to gold.
So, going back to crypto, which is not just Bitcoin, there are many other tokens, and actually some of them, they are pegged to gold. So let's say PAXG, tether.
Yeah.
Gold.
Well, that's very different.
Yeah.
So if you have a cryptocurrency that is actually tokenized gold, that the crypto represents ownership of actual gold, well, now you're talking about something legitimate. You're talking about another way to own gold, and own it in a way that it's more liquid. Because if I own physical gold and I want to send you some gold, I'd have to, put it in a box and FedEx it to you or something like that. But if I have gold stored in a reputable depository, and I have a token that represents ownership of that gold, I can send you that token or some portion of that token instantly for free, or practically for free. And now you own the gold, because now you have the token. So that's very different than a crypto that has absolutely no ties to anything real, that all you have is the token, like Bitcoin. I mean, in a way, Bitcoin is like fiat. It's a fiat cryptocurrency, whereas a cryptocurrency backed by gold, and there's only a few of them out there, right? Paxos, like say, is one of them. So Paxos would be a legitimate cryptocurrency that's backed by real money, and Bitcoin is a fiat crypto that's backed by nothing. It's just a bunch of hype.
Are you planning to do a token back by gold yourself?
Yeah, I may. I mean, I may just launch one. I mean, it's like, the public is not really screaming for one right now. I mean, because they mainly want to gamble with tokens. They want tokens that can go to the moon. They don't want a token that's tied to something real. They want a hot story. But I think eventually that's where they go. I'd probably already have a token if it wasn't for all the regulation and compliance costs that make it a lot more expensive to actually have one. If it wasn't for governments, there'd be plenty of gold-backed tokens. And, that's not an accident. The government doesn't want those. See, the government doesn't care if you lose your money on Bitcoin. Bitcoin is not a threat to their fiat monetary system, but gold is. And so gold-backed cryptocurrencies are something that governments may actually fear and try to prevent.
If we talk about the innovation that blockchain has brought in general, right, disrupting different kind of industry, as a stockbroker, how do you think blockchain is going to change or is changing, the stock market, for example?
Well, I don't know. I mean, it has potential, but I mean, it's been around for a while now. It hasn't changed anything. I mean, it's possible that you could have securities that are on a blockchain where people can buy and sell shares of stocks the way they now, buy and sell, Bitcoin. So it's possible that, that could be a way of recording ownership of stock. And other things. I mean, you could have title to an automobile or title to a home. Insurance policies could be on a blockchain. I mean, there's a lot of things that could be on a blockchain. But I mean, I said that 10 years ago and they're still not there, right? So there's some potential for blockchain, but who knows what's going to be realized there. So far, the main use of a blockchain is to facilitate gambling on tokens. So far, they're not doing anything.
Why there are so many people that just keep coming to the party? I mean, the people can
It's the money. It's that, look, it's people want to get rich. It's a story. Yeah. It's a sexy story. People don't really understand money. They know just enough about it to get themselves in trouble. But look, you go to a casino and everybody's standing around the table where somebody's winning and they're making a lot of noise, right? Why is that? Because the minute a table starts to win and a guy is rolling a lot of numbers and he's cheering, and now more people come to that table and he keeps winning and it gets a bigger and bigger crowd because people want to be with the hot roller. They want to be where the money is, where the action is, right? And you'll see all these other tables and there's nobody there, right? Because that's not where the winning was going on until eventually it craps out and everybody loses. But so Bitcoin's been around for a while. There's been a lot of people that have made a lot of money and all of a sudden it, shoots up again. Big run. And now everybody moves out of some of the tech stock casino or wherever they were gambling. And now they crowd around the Bitcoin table. But, they're going to lose. I mean, the house wins and they're going to end up losing this crapshoot that they're taking. They don't realize, they've dressed it up in the trappings of a legitimate investment. And you have so many people, in the investment community claiming it's real investment. It's not. But some of the people that are claiming this are just saying it to push up the price because they already bought it. Everybody who owns Bitcoin has to constantly promote it because you got to sucker in new buyers because that's the only way the price is going to go up. There's no real use for Bitcoin. So the only way to keep it going is if more people decide to buy it. You have to constantly get new people in, or you got to get the people who are already in to keep buying it. But a lot of these Bitcoiners are already all in. I mean, they can't buy anymore. They've maxed out. So they need new blood to come in. But it's getting harder. I mean, they got a whole fresh dose of it with these ETFs, but I think they've pretty much, picked that market. I don't think there's a lot more. They think, there's going to be more money coming in. There's more firms that are going to come in. I doubt it. I mean, I think it's all the self-directed accounts. I don't think the traditional full-service broker is going to recommend these ETFs. I don't think their compliance departments would allow any broker to recommend these products because they're much too risky. You'll get sued. You put your client in this thing and they tank and you're going to get sued. So they're not going to do it.
But you see that now there are, now they are also in Hong Kong. So there is more and more houses they are embracing the space. Let's call it that way.
Well, you're talking about with the ETFs. the Wall Street firms have offered these ETFs to their customers. I mean, they don't necessarily endorse them. They haven't bought them with their own money. They're simply making them available because they figure that the public wants it, and they may as well gamble at their casino where they can get the rake versus go to the casino next door. But I think a lot of these firms are going to regret rolling these things out because their clients are going to end up losing a lot of money, and that's not going to, be good for the brokerage firms that allowed that, because when your clients lose a lot of money, they're not as good customers anymore because they don't have any money to trade.
Well, listen, last question. When we talk about investment, we always say that investors should diversify their portfolio. I'm curious to know, how do you diversify your portfolio?
Well, I diversify it with a basket of stocks. I own quite a few stocks. I own a lot of stocks for my clients, a lot of dividend-paying value stocks. We diversify across countries, across currencies, across sectors, industries, individual companies. We also have different asset classes. You can own equities, bonds, commodities, precious metals. So I think we have a lot of diversity in the portfolios, but the ones that I am creating, I'm trying to avoid the US. So I'm not diversifying into US assets in the dollar. I'm encouraging people to get out. And I think the US market is extremely overvalued. I think the US dollar is extremely overpriced relative to other currencies. So I think we have a major currency, sovereign debt, economic, financial crisis coming in the US. And I think it's going to be very destructive to the real value of US assets. What happens to the nominal value is hard to say, but the real value, the value in terms of gold or other foreign assets, I think is going to fall precipitously. And I think a lot of Americans are going to end up a lot poorer in the future, unfortunately, than they are today.
Well, they will become all the zombies when you come to the US. There are all these zombies in the streets. So, well, listen, do you have a view on on UK and Europe at all?
Yeah, well, look, they've made a lot of mistakes in the Eurozone. They've made a lot of mistakes in the UK. Inflation is going to be a big problem in Europe for a long time, just like it is in the United States. So we're very selective about, the types of businesses that we invest in over there and the companies. But yeah, I mean, it's going to be tough. It's going to be tough in Japan as well. They've all been playing from the same bad playbook. This idea that we need inflation, inflation's too low. They've all done quantitative easing. The governments have been running massive deficits. It's a huge problem. The emerging markets are in much, much better shape economically than the major developed Western economies.
So when you talk about emerging markets, give me some of your favorite places.
Well, Southeast Asia, South America, these countries, their currencies, I think, have a ways to appreciate. They're very productive. They've been producing a lot. And I think that, those economies are in better shape. I mean, demographically, you have a younger population. They're working. You don't have the demographic problem of people retiring, depending on government, Ponzi type insurance programs like Social Security. So they're much better positioned for real economic growth than other countries are. And the United States in particular, because of our service sector economy is very unique, and it's very vulnerable to collapse when the dollar loses its status as the reserve currency.
Okay, Peter, thank you so much for coming on the show.
All right. Well, my pleasure. Take care.